Good afternoon, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's September 26th. Hey, sorry for the delayed video here today. Got a little tied up this morning, but want to get this out to you. So we're down to kind of the last couple hours of the markets here so far, and let's touch on what the market news is. So today we got the Case-Shiller Home Price Index. This is a gauge that looks at the 20 largest markets in the U.S. on how they're going up, and still looks rosy across the board. Back in June, we had a 5.8% year-over-year appreciation, and then July it went up a little bit to 5.9%. So we all kind of knew home prices are going up, and again, these are in the modest levels now and more sustainable. We also got consumer confidence for the month of September. So back in August, we had 120.4, which is a great number there. Forecast is supposed to dip down to 119.5, and it dipped down to 119.8. So it did dip a little bit, not huge, still kind of in line with expectations. Again, not a huge change from August to September, what people are feeling about where economy and everything else is moving. Last but not least, we got the new home sales. So back in July, we had we were on pace for 580,000 new home sales. These are contracts that were signed for new homes. Forecast supposed to go up to 585, and it pulled back. And some of this could probably be contributed to a few factors, and one of them being most notably the hurricanes we had, Irma and Harvey, could have dissipated some or affected this market as well, as we had Harvey, I believe, hit towards the end of August, so it may have had some impact in this as well. So we may have to kind of look at some of these with a kind of a grain of salt. At least we have an explanation why, and obviously they're going to be doing some rebuilding, so we may see an improvement in that coming down the line in those areas as well with the rebuilding. So let's take a look here at the headline news. Stock market is up. It's kind of rebounding from yesterday's losses. Miss Yellen was speaking earlier today, but market's not really not affected by what she said. They are kind of shrugging their shoulders as what she said, and she actually had an important topic. It was talking about inflation and uncertainty in the markets and stuff like that, and I just don't think they were buying it, to be on the to be honest. We had the Fed funds futures rate come out today and basically said 0% rate hike in November, but December's meeting they're still giving it a 71% chance of a rate hike. Now she was kind of almost defending the rate hikes, even though we have very low inflation, basically saying that inflation she feels is transitory, meaning that at some point it's going to catch up, it's going to start taking off, and by defending it is by saying that by raising these hikes, we're getting prepared for that when that happens. So when that happens, we're already ahead of the curve and not having to be reactive. We're being proactive and getting ahead of the curve. But right now, we're still pretty low, and we still got to wonder is when are we going to be able to pick these up? And part of it is Congress. We're not waiting on Congress really doing anything. They're not coming out with the taxes. They're not doing the healthcare. They're not doing a lot of things that are just not coming out with, and until they do, we may not see that spike in the market as we were kind of hoping or expecting here. So let's go ahead and see how this is affecting the bond market. And the bond market's doing all right. We're up about 3 basis points, so it's not anything to really to write home about, but it's not putting us into a negative area here. So we're still kind of in between this 25-day moving average and 50-day moving average. So yesterday we started the day down below. Today we actually start up higher. So now we're starting to look at maybe possibly a trend reversal here. So now we're getting several days up. Now yesterday was a little hard because we started lower than where we started the day before. But today we started much higher, pretty much in line with where we left off. Now we are touching off on this 25-day moving average, but you gotta wonder for how long. Maybe we will bust through that again. So, which will bring us to the 10-day Treasury. So, 10-year Treasury, we finally broke below that 100-day moving average. We're testing it today, and we've still been knocked down. We're only down about 1 basis point, or actually up about up 1 basis point from where we left off yesterday. So as you can see, we had a pretty big sell-off here. We closed here. We touched the 50-day moving average. We're not touching the 50-day moving average, but we are touching here, and it may keep pushing us down. If it keeps resisting, it may just keep going downwards. So we're starting to get a level here where the yields are moving downwards. So some money going into yields, it's moving into the mortgage-backed securities, which is helping on interest rates. But today, of course, because there's not much, 3 basis points, not enough to really to make a difference in pricing so interest rates are about the same as what we left off yesterday here, is what I'm saying. All right, so that pretty much wraps it up. I hope you guys have a great day. Feel free to come over to Twitter, and you'll find me at Mike Bjork on Twitter, and you can see more updates throughout the day. I hope you guys have a wonderful rest of your day, and we'll look forward to see you guys tomorrow. Bye-bye.